Hi, this is Dave Pryor. I'm here at Agile 2014 for Projects at Work. And right now I'm with John Rudd from SolutionsIQ. Thank
Hello.
you for taking the time to come by.
Thanks, Dave. It's my pleasure. Thanks for inviting me.
Oh, it's great to have you here. So you're here at the conference and you're giving two different talks. You guys are also an exhibitor.
Yes, correct.
But your first talk yesterday was with Charlie,
That's right, my brother.
your brother, and it was on the transformation process that you guys went through.
That's correct.
Right. So can you say a little bit about that?
Yeah, so my brother and I purchased the business about 8 years ago, and at the time we purchased it, neither of us came from the Agile space at that point in time, although Charlie had been running the business prior to purchasing it, so he was aware of the practices. I come from a strictly financial background,
which is very important right now.
Yeah, well, actually, now all of a sudden people are listening to me for a change. So when we purchased it, it was a 7 vice presidents, very traditionally run kind of operation. And as we went through our service offerings, we kind of did a rationalization of service offerings and got into the ones that we thought made a lot of sense. And we gravitated around this Agile space. And as we got into it, it has a tendency to kind of infect you a little bit, right? So not only did we feel it was a great business model to go forward, but we actually felt that if this is something that we really were trying to bring to the market and we holistically kind of went around the Agile space, we needed to really be doing what we were preaching. So that was the impetus. So probably around 6 years ago, we took the first step, and it has been a mad and wild journey, ever since.
And you guys your approach to it is very, very team focused within the company, right?
That's correct.
How you guys do the work?
That's correct, yeah.
Can you explain a little bit about how you're organized that way?
Yeah, so I think what we go through it in the presentation quite a bit, but there are a few things. As we kind of made this jump off the dock and saying we wanted to be a more agile organization, it included maybe two fundamental areas. One was an invitation to the employees that we can do whatever we want to do.
Right.
And the reason I call it jumping off the dock is when you make that invitation, you need to be able to stick behind it.
Yeah.
So there was an element of what does that mean? And we've gone through all kinds of, evolutions, or iterations, I should say. But initially what it meant was mob rule chaos, and that was not terribly effective.
But it's a starting point.
It's a starting point. And we survived that, and we felt that there was a need for a little bit of structure. So as we kind of learned, we started to find, where can we provide structure, and then where can we provide room for people to think and grow?
Sure.
And the analogy I like to use is it's like the frame on a picture, right?
Yeah.
And so if you take a look at a blank canvas and you have no frame, what you have is graffiti on the side of a garage.
Right.
When you actually put a frame there, then you actually have some, art that you can
something to work around.
Something you can work around. So having some constraints around it, that allowed us to get our vision and what we call our guiding principles around any policies and procedures. And then within the canvas, we invite the employees to kind of do what they want to do.
Cool.
So that was kind of, once we had that foundation in place, there was a real push to move into self-organized teams. And I use the word team loosely here now, not from, I'm sure there'd be a lot of Scrum coaches that would scold me after this interview because we actually have, kind of loosened the terms a bit.
Right.
But for our purpose, we needed to do that because we couldn't take the pure Scrum model and apply it to what we were doing. So we started to do self-organized teams throughout the operation of the organization, really kind of try to eliminate the manager role.
Right.
Had product owners that were driving priorities and backlogs that the teams were around. And then on the consulting side of the organization, what we did is we set up teams that were organized around statements of work for clients. And what we started to do was eliminate kind of the me's from the puzzle in terms of getting things done, like who would be where, when. Right. And we let the team self-organize around helping grow a client and figuring out how to put the pieces together.
That's a lot of trust you're placing in that.
Well, and it didn't come easily for me to give that up. So it was, and I'd say that was an evolutionary process, but we went kind of whole hog in the teams at that level probably a little less than a year ago. So we started to experiment it with Q4 of last year, and then by Q1 we had pretty much, handed the reins over.
Cool, that's great. And so you have another talk tomorrow.
Yes.
And your talk tomorrow is about active portfolio management.
Correct.
Right? So portfolio management is a really big topic here. And I feel like everybody I talk to has got some different financial tool that they found that they're bringing into play.
Yeah.
But you actually come from a financial background.
That's right. I am that's what I say is I'm a recovering capitalist, so financial consultant. So it's kind of hard for me sometimes to get warmed up to the Agile community, but I am. I
totally
actually
understand.
purchased.
But
a
they're
pair of
warming up to
flip-flops.
you now,
Yeah,
right? So that's good.
So it's working out well. But yeah, so it's actually a interest. It's not only an interest, but it's a passion of mine.
Right.
And what sparked my interest a few years ago, and this is after I first got involved with SolutionsIQ, is we had these teams that were, XP teams that were doing Scrum
Right.
for clients. And our clients kept on coming and saying, how come you guys can actually deliver faster than anybody else in our organization? Which, of course, now in the Agile community, people realize you get these teams together.
Yeah.
But that was, I didn't know anything about it. And so what I had thought was just kind of this feel-good hippie initiative, actually started to kind of say, what is really behind it? So I did some proofs on the value of early release, and some other proofs around how would you actually start to quantify this. So I started kind of just for fun, because I had piqued interest to experiment with this probably about 5 years ago or so, and then I've refined it over the years.
So as somebody who's coming from that more traditional background, right, into this space, and you're using the tools that you learned in your previous role, what's been the most valuable thing that you found in terms of understanding what's happening with the teams? Like, what, if they're financial tools, which ones do you gravitate towards?
Well, it's so that would be going down to the leaves on the trees. So can I talk about the forest a little bit first? So there's definitely a paradigm shift that's taken place, and like I say, there needs to be some understanding or some acknowledgement of the fact that this all boils down to product life cycle.
Right.
And in a world where you've got a very long expectation of market stability, so a long expectation of product life cycle, you can actually build things big, and you can use economies of scale as one of your key drivers to determine how you're going to go forward. When that market certainty starts to shrink and your product lifestyle starts to shrink, if you don't change your governance system to address that, you're going to get yourself into underperforming, kind of projects. So the first thing was kind of this recognition that market instability not only is it here to stay, but it is exponential. It will stay exponential. I mean, we are at a very interesting time in life. And what that means is with the emergence of new platforms kind of across the board, at any given time, something that had been tried and true mainstay could evaporate tomorrow. So if that's the case, now I look at it from kind of one perspective, and that is increasing shareholder value. So any good financial guy will tell you is that's what the objective of a management team is to its shareholders. If you can't increase their value, you give them back their money. So when we're in a situation where you're using a governance system that builds something big but a very short market, then what you're doing is you're not doing a prudent investment for your investors. So that kind of led to how do you make the changes here. So that was kind of again kind of above the forest, getting down to the trees a little bit. Is the real fundamental issue comes from this concept of a project. Beginning, middle, and an end. It does a few things. What it does is we've got a governance system that funds a project. So if we want to be free and dynamic and be able to find out a small piece of value which might have priority over another small piece of value and be able to very nimbly do that, we have to unlock that from the paradigm of the project. So getting to that point, it really requires a lot of changes, because how we fund things, how we get things done on an overall approval basis, and how we do the work. Get funding for a project, we bring people to the project, they do the work, they walk away from the project, and that's how it's done. So when you get into the mode and you say there's some really just kind of common sense addressing the short market time or product life cycle time, get to market quicker. Make smaller bets because you don't know. And to the extent that you have to make a larger bet, you should do it in an incremental fashion. That's all just kind of, you don't need to have a doctorate.
It's common sense, basically.
Common sense. So if you've got this old project paradigm, it really flies in the face of all those things. So when you mix that up a little bit, now what it says, okay, well, if you do have one component of the value or another component of the value, how do you measure those against each other? So now it gets to the tools a little bit. And historically, companies have used net present value for evaluation. It's okay to go to sleep right now if you'd like.
They can't go to sleep. You have to know. You have to go relearn all this stuff because it's become important again.
But the concept of net present value, without going into the specific details, is quite simple. What it does is it says if you have a positive net present value,
Right.
it's a thumbs up on the project. The amount of positive net present value is somewhat indifferent in the way that we've worked traditionally because it's a hurdle rate mentality, which means
it's good enough. Go forward.
Go for it. Go forward. So, but that's an independent view of a project. It's not a comparative view of a project.
Right.
So there's another way of doing that. Again, this isn't new and revolutionary. It's called internal rate of return, IRR. And what IRR will do is it'll tell you for a component of value what the average return for every dollar invested is. So you'd see an IRR might be of 22% for this investment, and the IRR might be for 15% for this investment. So what you actually have is a meaningful way to be able to take two components of value and measure them against each other and find out what has the higher priority.
Okay, so but if you're introducing something new, let's say it's a game, and you have to choose between two different features, right? Which one's going to go to the top of the backlog? If it's not out there yet, if you can't test it to see who's going to actually be paying for it, how do you figure out what you're going to get back?
Okay, so it's a great segue into the other one of the other tools that we're using, and that is this concept that, again, in the old world, there was a certain amount of certainty with what you wanted to do, right? So I can predict reliably.
Right.
That's an assumption. And that's how that governance system's set up. When I can't predict reliably, what I need to know is that I'm actually going into an area where I've got expanding variance in where what my model will produce.
Okay.
And you think about a very volatile stock.
Sure.
You know, you think of like a biotechs a few years ago were up and down, you know. So that's the way that these, you know, especially on the innovation bets, is we have a very, very wide range of possibilities. So one of the things that I'll introduce in tomorrow's talk is this concept of sectors. So what we should do is if we have innovation bets, we should put those all together. And from a governance perspective, we should say, what's the level of variance that's acceptable to us from a project? So to the extent that I've hit my variance threshold, then I've hit my return threshold, it makes sense to move forward on making investments in that project. While I'm outside the lines in terms of that variance, there are ways, and we were talking a little bit earlier about this concept of real options, you know, which is you know, slightly applied to this as well. And it's the concept of the variance is wide. So you might use an example where, boy, you know, how many units do you think we're going to sell? Or how many subscriptions we're going to sell?
And you have no idea.
Well, we're going to sell 1 million. Well, you know, then you take a look at the analysis, and the range was between 1 and 2 million. You know, so they came up with 1 million.
Sure.
But that's not a very safe bet. So you'd say, well, you know, what we need to do is we need to get some more certainty around that. So let's do a you know, customer focus you know, discussion. So what you do is you laser in on the key variables that are driving the variance in the model, and you try to iterate away from those. And the idea is that it's okay to make those investments, but they need to be very small investments, and they need to continue to iterate to a less and less volatile state, recognizing you're still going to have a volatile state with innovation, but you want to narrow that to the extent you can.
So not complete predictability, but more than you had before, or an increasing amount.
It's a little more confidence than you had before, still an acknowledgement that there's going to be broad variance, but again, then we take some of the other agile practices, which is kind of watching how we're building out. Because let's say we're into new technology, which increases more risk and,
for everybody,
into the equation, is we may have an assumption about building something out. If you get 2 iterations into it, and we're all of a sudden modifying our assumption and saying it's going to take 150% of the time that we thought it was going to get there, it's recalibrating what we call the dynamic business case, but recalibrating the business case may not make sense at that point in time.
Okay. And so if you decide that this project may not make sense, you're weighing the cost of putting on a hold, the cost of bailing on it.
Yeah, so it would be, and I would say in the context of, uses the term project. If I do that, by the way, you can taser me.
For saying project?
Yes, exactly.
What are we supposed to say?
Investment.
Oh,
because that's exactly what it is.
Yeah,
it's an investment, and the reason with project is it's a little bit of a misnomer, and it has a tendency to feel different sizes for different people and different, you know, programs for different people. So I've tried to, but
it's okay. I think the PMPs, we have a very specific definition we have to memorize. So it's,
so that's why I've gone to investment, just to try to take the emotion out of the dialogue around that. But yeah, so if you are, let me give another example. Okay, let's assume that you actually have existing product in which you're looking at product enhancements.
Okay.
Okay, you're a lot closer to your customers. Your customers are calling up and telling you what they'd like.
Yeah, I need this, I need that.
So my expectation on the variance of return is going to shrink a little bit, right?
Right.
I've got more certainty associated with that range of possibility.
Yeah.
I still may be wrong, but my best guess is that range of possibilities is
And that's based on customer feedback.
customer
Right.
feedback. So I have a little bit more knowledge, and that's why I've got a little bit of a different governance associated with my enhancement than I
Okay.
do with my overall
Okay.
innovation.
Sure. Okay.
I lost my train of thought.
So what happens if you decide this is a project that we need to just cancel?
Oh, okay. Yeah. So it would be. So this kind of goes into the other kind of big side. One is kind of break that project down into more of this flow, and then the other one is we've got to treat. And I'll use the analogy of an airline. So Southwest Airlines there's a great business case out there that was written I think in the 1990s, and it talks about how the other airlines were focused on marketing. They were focused on filling up their planes.
Yep.
And what they realized is that the game was all return on assets.
Yeah.
And the winner of the game is the one that was the most efficient user of those assets. And apologies to the agilists here, but when you actually look at investment in a team, what you're doing is you're building up a corporate asset. So a persistent team
Okay.
is a unit of capacity.
Right.
So what we really need to do is leverage that the best way possible to get the highest return on that unit of capacity.
Right.
So when we kind of shuffle our framework to think, okay, well, we've got all of these, production units on a monthly basis,
Yep.
and how am I optimizing my return on those? It now becomes a little bit of a different game
Yeah.
of what can I do to feed my capability so I'm going to be able to maximize my return.
Okay.
I've got now the tool of IRR so I can compare two investment
Sure.
decisions next to each other, and then you need to take in the factor cost of delay or
Sure.
cost of early exit, as I call it, as you compare the projects, and then you make the best choice for what's the highest value for that team to produce.
Okay. So one of the things I've been wanting to ask you about is the financial tools are obviously, it is like the new thing, right? And that's something that a lot of people with experience on the traditional side of the house or larger companies where that level of governance is really important. To me, it would seem that would open doors for them into the Agile arena, where they might have walked in earlier like completely confused because they don't know what a burn down chart is, and it doesn't make any sense that you let people do whatever they want to do. How are we going to know if they're doing it right or if we're on schedule or whatever? But these kind of tools should be, I would think, familiar enough to them that they'd be able to maybe latch on to something that will help them get their feet with Agile.
Yeah, so I think a lot of the concepts that we roll. IRR is not a new concept
Right.
by any stretch. It's just, and again, it's an effective tool that's been out there. I think one of the things that is the bigger challenge. Then how do we assemble a way of providing value? Because like I say, that to me seems fairly straightforward, and IRR is not novel.
Okay.
But the governance change required to get the organization to think that way is monumental.
And not just, the whole cultural value system behind it as well.
Absolutely.
And maybe, do you think that within the Agile community that some of those tools are going to bring more dissonance for them in the same way that Agile might bring a cultural debt to a traditional organization? Bringing traditional tools into an Agile organization is transformation as well.
Yeah. Well, there aren't a lot of Agile organizations out there. At least not in the Fortune 1000.
That are truly Agile.
Yeah. There are a lot of IT organizations within large companies that are striving to be Agile.
Okay.
And so I think it's a little upside down.
Okay.
What we'll often get from our clients is, where it comes out of the IT side is we're really having a hard time bringing the business on board. Okay. So let's take two steps back.
Okay.
If you weren't saying it was an IT initiative or a business initiative or anything else, but you simply said, we've got this shrinking market certainty.
Right.
And now, as I like to refer to it, is you've got this magic box.
Yeah.
In business, you can take features of about this size, and you can put it in the magic box, and after the particular iteration of, say, 2 weeks or some period of time, value that's going to come out.
Okay.
If you actually had that capability,
Right.
and we know that the market's shrinking, would we do things differently? And
you would hope, but I don't think a lot of people are.
well, people don't think about it from that perspective, and that's why I say a
Okay.
lot of times it's coming from the IT as their initiative,
Right.
and we're not viewing it from the perspective of organizationally where things are. And that's why I like to put it in the context of how is this going to improve shareholder value?
Okay.
Because at the business side, fundamentally, I mean, and I understand we deal with politics and we deal with personalities and those kinds of things, but when you strip it down, if we actually can provide capability on the delivery side that can be leveraged by the business to improve that value.
Yeah.
And this is pretty self-evident as we described in terms of techniques for addressing, shorter, life cycles.
Right.
So I think we've done a poor job in the Agile community of being able to articulate that
Okay.
and lead with this is the why we're actually going forward.
Okay. That's great. All right, so you guys, I'm assuming you're rolling out services and things like that along these lines. Can you talk about what it's like, when you're working with customers now? How are they adapting to these types of things? Are they welcoming of it? Is it just more confusing for them?
Well, confusing is probably not the right word, but I think there's lots of apprehension.
Okay.
Which, of course, is to be expected,
Sure.
right? Because we're talking about changing roles. I think one of the things that we find that's most lacking in it is that an initiative starts in a functional area.
Like IT.
Like IT.
Right.
And even within IT, right, is that you might have test as kind of a different view of things that's going on with dev than the project management office might
Sure.
have as well. So it comes out of a particular area, and what is the great killer of Agile initiatives is passive resistance.
Okay.
So not working day one, day two, and every day thereafter on keeping the organizations aligned on what the objectives are and the pace in which you're moving
Right.
has caused great problems. And again, that passive resistance pops up. And there are a number of people that have weighted their careers through organizational change after organizational change. So they understand kind of how it works from a politics perspective. And that's why it's great in IT. And even if you've got a very unified group within IT that pushes it to the outer bounds there,
Sure.
it's got to get through the rest of the organization if you
Right.
really want to leverage it for the benefit of the shareholders.
Okay. And so, do you think that being able to look at the work that we do in Agile with some of these financial tools, does it, I don't know, kind of level things out a little bit when you're trying to work with the rest of the organization, a big company, and measure the value that they're going to provide on an Agile side against all the waterfall, traditional artifacts, things like that? Does it help them connect a little better?
Yeah, I think it does. I mean, it certainly addresses a series of buts, right? And what I find is that the governance system, even if the business is on board, is still extremely slow to change.
Yeah.
Because now we're talking about finance and audit that's
Right.
coming into the equation, and we deal with audit, on the capex versus opex. So that's been around. We're still kind of chewing on that over the last couple of years. But more specifically, I think it really needs to get at the CFO's desk. And if they actually recognized, if I could alter my governance system, I could actually tap into this capability. Now you've
Which
got
will
an
provide
initiative.
exponential savings and all that other stuff.
Yeah, so what happens now is the business is seeing, not only support from what they can do on the delivery side, but they're seeing support that I don't have to put this jerry-rigged, kind of what do they call it, Rube Goldberg, governance system together to deal with the Agile projects.
Sure.
Because life's hard enough anyway. We all have, productivity in the United States is higher than any other country. And it's because people work their butts off.
Because we don't take vacation.
Because we're idiots.
Exactly.
But
we'll have more done than they will. They'll have happier lives, but we'll get more stuff done.
That's right. So I think the idea of the fact that one more obstacle on, now I got to address this variance, or the change management system. It's too much.
It's funny to me because you think about when you introduce transparency, and everybody who's not going to be in trouble for that is like, this is awesome. But now with the transparency, and we're also going to measure with all the financial tools that scare the crap out of you anyway.
Yes.
It's a lot.
Well,
to take
and
on.
I think one of the things too is the financial comes in the form of metrics.
Yeah.
And metrics aren't a bad thing, but they're often used in
They
very
can
bad
be,
ways.
yes.
Yeah. So it's a careful balance of being able to, let's say, provide that freedom for people to actually perform extremely well, without putting it in the context where, and if you don't.
Yeah. It's
you know?
curtains for you.
Yeah, and that becomes another kind of cultural change for the organization. Is the organization should really have the viewpoint of how can we help you get there,
Yeah.
as opposed to you must get there.
Yeah. Cool. All right. So tomorrow, what time?
Tomorrow at 9:00.
All right. Cool. Thanks for coming by.
Hope to see you all there. Thanks
Yeah.
very much for the time. Appreciate it.
Thank you for
Dave.
coming.